Alrighty everyone, it's Elysium here with lesson number 6, I think it is. Basically going to be doing a lesson on sort of pre-market preparation, preparing a watch list, getting ready to trade, some things that I think you should be doing before you even think about taking any trades. This will apply mostly to stocks, but a lot of the same concepts will apply for crypto, for those of you who just aren't interested in stock trading and want to stick to crypto trading. But this will mostly focus on those who want to get into stock trading. So basically I'm going to go through what I personally do, what I think is a good idea. Obviously there are different things, different strategies. I'll go into depth in more of the different strategies that apply a little less to what I'm going through for this pre-market preparation, but I think this is a pretty good place to start. So the way I start every single one of my trading mornings is by building a watch list for starters. So when I'm building my watch lists, I like to focus on the top % gainers and top % losers that have volume to support. Now, when I talk about having the volume to support, I'm talking about, millions of shares traded in the pre-market. I'm talking about things that actually have huge amounts of liquidity, which means that you have the ability to get in and out of trades. There's volume, so there's where the traders' interests are, so you see more predictable patterns playing out because really the predictability comes from the amount of people trading, the amount of shares being traded, and things like that. So you really want to be looking at things that go where the action is, basically, is what I'm saying. So what I do personally now, there's lots of different places you can do this, lots of different ways you can find this information. Personally, I use this website. Let's see if it just brings up here. So this is investing.com. There is a pre-market tab which will highlight the top % winners, top % losers that are trading over 1 million shares. So this is a pretty good place to start because you know that there's at least going to be attention there. You know that this is where a lot of traders are looking, where traders are trading. So I tend to fill my watch list in. I use TradingView for my charting and things like that, but whatever you want to use is fine. Most brokers have inbuilt charting. You can chart directly through your broker. I use interactive brokers. I'm not a huge fan of their actual layout and charting features, so I tend to use interactive brokers just for actually making my trades and what's called the level 2, which I'll have a video on separately once I can actually get into my broker, which I can't at the moment. But anyway, you'll see on the right hand side here you have the pre-market most active stocks. So I've already done it here, so I'll just move this out of the way again. I've added these top gainers and top losers to my watch list here. Let me just move this down a little bit. I also have the indexes. I always keep those tracked because most stocks will follow the general direction of the market. So if it's a green day, the markets are all up, the indexes, the major indexes, you get SPY, NASDAQ, Dow Jones, obviously got Bitcoin and the Volatility Index as well. These are the kind of things that you should be watching for the overall market trend, because that should give you an idea of generally where stocks will be going, if they'll be going up or down. Obviously, there are plenty of exceptions. There are going to be ones that are sort of decoupled from these markets, and you can focus on those as well, of course. It's just all about focusing where the volume is. So I'm going to start with AGL here because this is one of the top gainers. As you can see, this is 5-minute candles at the moment. This is just showing the after hours starting here in the pre-market. So this is all outside of the regular trading hours where this has started happening. You can see that there's been this huge volume spike down here, and it's started to fade a little bit towards the market open. It's 9:15 a.m. Eastern Standard Time. So I've got 15 minutes until the market opens. And you can see we got similar things going on here. So this volumes just started building very recently in the last hour or so. Started to get some bigger moves. Same thing here. These are ones that are just all the top percent gainers with some large volume. This one's only just started to get some volume. It had quite a lot of volume yesterday. So when you're building these watch lists, I suggest you check them out in multiple time frames because it's important to see what the overall chart is looking like as well. So you can see that this on the daily here, this is AGLE again. It's got a huge downtrend, huge overall downtrend. You're seeing this gaps down, been sort of chopping around, gaps down, chopping around. So something like this is something I'm not particularly interested in because the overall downtrend is what you tend to look at, but you can see that the volume here relative to any of these other days is absolutely massive. So traders have started to take interest in this stock again, and a lot of the time when you have something this heavily shorted, you'll have a short squeeze of some kind, which can cause the price to move up pretty significantly. You'll see with all these meme stocks that I'll go into a little bit, that's kind of a similar trend as to what they all ended up with, these huge downtrends followed by these spikes up. So it's worth sort of checking all of these things on different time frames just to see what kind of interest, kind of play you'd be looking to make if you're looking for a, well, I don't want to go too much into different strategies, but if you're looking for what I call a first green day, which essentially means you have many red days in a row, and if they have histories of having, say here, the first proper green candle, if they have history of having follow through, you know, here do they have more green days after they have the first green day, or do they have a single green day and then just immediately go back down? It's worth checking these kind of things because a lot of the time people will get on the momentum train. So if you have, multiple red days followed by a green day, people see this and go, oh, okay, this stock's turning around. You get more buyers interested and the price gets pushed higher. So that's a pretty typical strategy, is to look for those first green days. As you can see, we've had a couple of red days here. Now it's gapping up pretty big. The only reason I'm not interested in this one so much is because the gap size is so large. It's, people would be chasing the entries up here. You're not going to see a huge amount of buyer interest when the price has already moved up so much, unless there's a pretty significant catalyst for the reason, like they have a partnership with someone. And this is a biotech stock, so sometimes they come up with new patents or something like that. It's worth going through and checking the news behind any of these. So if there's some sort of catalyst or reason that the stock is moving up. I can see here with GCT, as you can see, there's no stock history. This means it's an IPO, so it's literally just been listed on the exchange, on NASDAQ, as you can see up here. Recently, IPOs have been pretty hot, actually. A lot of these new IPO plays have been moving pretty significantly. You'll see things like HKD, AMTD, some of these new plays that have come in, they've just been absolutely insane. They've gone up thousands of percent. So IPOs are a bit of a hot sector right now, which essentially just means, an area where a lot of people are watching because they've had a lot of action recently. So people tend to focus on the same sectors that have had interest. So GCT's IPO plays, not a lot of chart history, so there's not much you can go off. So again, I'm not super interested in something like this. You can play it kind of intraday, which means you're looking at smaller time frames and you're looking for your, supports and resistances. So you can see here, we had a little bit of resistance and a breakout. we've kind of come back up here. Looks like we're making a new sort of channel here with some resistance and some support, but it's pretty choppy, so I'm not particularly interested in this one either. And now we got SMMT. So this one's been pretty choppy, but you can see here we've had a pretty clear support level around this sort of 90-cent range. Had a lot of bouncing around here, and it kind of looks like we're having a bit of a breakout of this channel. So this is one I'm a bit more interested in. You can see we've had a big volume spike, broken out over the $1 whole number, which is a pretty classic area of support and resistance. So often when you see a move over $1, you have a bit more momentum to go with it. So this one is something I'll be watching pretty carefully, because this has the volume. It's obviously been pretty heavily shorted, but you can see that it's got a history of spiking pretty big and having some follow-up spikes. So a lot of the time when it has a green day, first green day, it has this kind of follow through. Then red days, follow through. So something like this looks like it's got a bit more of a predictable chart. You can see pretty often they've got, you know, clear resistance levels, support, and then you're like breakouts, making new support, so on and so forth. So this is the kind of thing I like to look for. Something that's got a predictable looking chart. Makes it a bit easier to trade and find trade setups. So this one I'm going to be moving to the top of my watch list, because this is something I'm very interested in watching for a potential play in the morning. Essentially, you want to make sure that you're focusing on the best setups. You don't need to trade every day. You don't need to be trying to play every single thing that's got high volume. And obviously, you'll adjust your watch list throughout the day, because while these have huge amounts of pre-market action, they've got, you know, lots of trading volume in the pre-hours and after hours. The majority of trading happens during the actual open hours, so 9:30 to 4. And generally speaking, the majority of the action happens within the first hour of the day. So you really want to be making sure that if you're serious about getting into stock trading, you are getting up, you know, half an hour before the market opens, and you're building your watch list. I suggest, you know, going through and trying to find some kind of trend lines and supports, looking for these breakout zones to see, okay, so, you know, had a clear large breakout from here. If we zoom in here, you can see it kind of came down and retested this area, sort of confirming the breakout and then pushing up higher. So this resistance became support. Now it's kind of sort of chopping around. You can see that up here we had a pretty clear level of resistance where the price was getting smacked down, and now it's kind of fading back down towards this original breakout level. So for me, I'm looking for something like a potential dip even closer to this support level, and a potential bounce play as the volume picks up in the morning. So it really depends what kind of strategy you're going for. I'm going to start going into these strategies more in depth every single day, but really what you're looking for is this volume, this liquidity, the fact that, as you can see up here, we've got a very small spread, so it's going to be easy to get in and out of without having to pay a huge amount in the difference between the bid and the ask. If you don't know a lot of the trader terminology, like if I'm saying spread and bid and ask and you're scratching your head, just do a Google of some trader terminology. I'm not going to go into that kind of stuff too much. It's just, it takes a lot of time for something that's pretty simple to find. So I do strongly suggest that you look into that if you don't know the trade terminology, because I will be using a lot of trader terms when I'm talking about anything in these lessons, so make sure that you're brushed up on that if you're serious about it. Now, obviously the same thing for this applies for coins. If you're trading crypto instead of stocks, obviously it's 24 hours, so you don't need to be worrying about doing it in the morning, but check out over the last 24-hour period, look at the highest volume traded coins. Obviously it's always going to be Ethereum and Bitcoin, just because that's where the majority of the action is, but look for the other coins, the top percent gainers, the things that have high volume shares traded, because that's where you'll find volatility, which is what you want, and liquidity, which is also what you want. You want to be able to get in and out of trades. You want to be able to have large amounts of volume actually showing you where the support is, where the resistances are, because as you can see, a lot of the time you'll have these volume spikes towards the highs and lows, and that just gives you more indication of where the largest amount of buyers and sellers are. So it can give you a bit more faith in these levels. You can kind of believe that this is an important level because you can see that there's volume at these levels. You can see that there's lots of buyers or lots of sellers, causing this price action, which gives you that sort of predictability, which is what you want. You need to be able to have that edge, so that you can, adequately manage your risk. You can figure out where you want to be entering and exiting the trades. So it's important that you have as much volume and predictability as possible in these trade setups. So once you've got all of this established, personally, I don't like to trade pre-market. You can trade pre-market, a lot of people do. It's a bit harder to get in and out for the same reason as I mentioned before, is that you will, even though these have a large amount of relative volume, you'll see that there'll be pretty large volume spikes at the open. I might run this video until, the market's about to open in 3 minutes, so I might be able to actually give you a bit of a live idea of something like this playing out. But the main thing that's important to remember in this lesson is that you're looking for these large percent winners or losers. If we go to the reverse, I didn't really go through the losers. We got these meme stocks, BBIG and BBBY, Bed Bath & Beyond. This has been a crazy stock over the last, few weeks really now. I think it went up to about a high of 30, and it's had a huge gap down from about $18 yesterday. This is the close of the market yesterday. It looks like it's about to open kind of down here in the $11 range, which is a pretty significant drop. These are lines that I actually had drawn from over a week ago, so it's actually come all the way back down into these support and resistance lines that I drew long ago. You can see that even after all this time, they're still kind of being respected. A lot of the time you'll see that if you maintain various drawings on your charts, that they end up at those same levels again, especially if you're drawing them based on the highest volume candles. So make sure that you're always looking at your volume. This is very important. If it's just, dead volume like this here, you can tend to ignore it because the price can move with low volume, but if there isn't the volume at those movements, it doesn't really matter, because it just takes one large buyer, one large seller to completely destroy those levels, because there isn't actually a huge amount of sellers or buyers at those levels. So you're looking for the areas where there are these volume spikes. That's where you're going to get the most key resistant levels. You'll see that that's the levels that will hold as support or resistance the most often. Now I'm going to go back to SMT here because the market's just opening. So we can see there's a bit more volatility immediately. We'll just zoom right in here. Now I like to use 1 minute candles when I'm actually day trading. I do flick between different time frames, 1 minute, 5 minute, 30 minute, hourly, etc., just to kind of get more confirmations on my levels. It's important that you check sort of as many different time frames as possible, because that will give you a better idea of where those key levels are. So you can see here already got this big volume spike at the open where it's trying to decide the direction. So I'm just going to watch this for a minute or so and kind of see what it does. It looks like it's currently trying to sell off a little bit. I'm hoping that it kind of comes down a little bit closer to this level. It's unlikely that you're perfect when it comes to these kind of plays. It probably won't come all the way down to here. What I normally look for on something like this is what I call a morning dip, where it does kind of spike up and then there's a bit of a panic sell-off as the selling pressure resumes, people taking profits, because this is still up over 20%, as you can see from the previous close. So there's still going to be a lot of people taking profits in these kind of situations, but because it's a first green day, I do expect that the buyers will resume and it will send the price, back up towards these levels. So we're kind of seeing that happen now. It sort of touched this pre-market level, and you could be, potentially buying here and looking for a bounce towards, these kind of higher areas. Obviously, I wouldn't be looking to take profits all the way up here or anything like that. Something like this, you're just looking for a bit of a bounce. Try and buy as close to the lower support areas and look to sort of sell, before you hit these kind of resistances where you have these larger candles. Even say this one here. So this is a pretty likely resistance area. You can see that the price was sort of held up here before it broke down, kind of knocked its head against this area and went back down. So this is a pretty kind of key area up here. And quickly flick through a few of these other ones. You can see this one's had a similar kind of price action. You had this morning dip with the big volume spike towards the open. Again, this is very typical of these stocks that are up big overnight. You see these drops in the morning right as at the open, and often they'll dip for first few minutes before continuing upwards. These are the kind of things I like to play a lot. You get these morning dip buys. See, all of these ones are doing the same kind of thing. As you can see, the markets have opened particularly red though, so you got to understand that when the markets are all quite red like this, your odds of succeeding in longs decrease, because as I mentioned earlier, a lot of the markets follow the indexes. So plenty of these stocks often will not recover when the markets are struggling this much. So it's better to be conservative on your longs when you're looking at something like this, because a lot of the time that's where you're going to see a lot of struggle, is if the markets are not looking good. So I tend to just flick through my top gainers, see if there's anything that looks like it's moving, see if there's anything that's getting to support levels. Make sure again that you're being a bit better than what I've been. You're actually drawing these levels. This one looks like it's sort of holding up towards its highs, getting a bit more bounce. This is the IPO play. As I mentioned, these are pretty hot at the moment, so it's good to focus on these hot sectors. I personally don't like to play these because there's no real chart history, but at the moment it is a hot sector, so it can be good to at least acknowledge what kind of action these have. So this has obviously had, a 10% move, and it's a 1 minute candle here, so it's pretty significant. And there it goes. You can see that it's breaking out here over this previous high and this. Now this is actually kind of good. You can see this just got halted here. So this is a volatility halt. This has happened because of how much the stock has moved in a short period of time. So this is an upside halt, which means that SEC has stopped trading to allow all the orders that are coming in to execute, basically. It's a bit scammy, really. It's just for market makers and things to be able to exit their positions safely. You don't really want to get caught in these. You can see this SMMT, the one I was looking at earlier, is still continuing kind of to dip towards the support, but you can see it's kind of starting to slow down here. Now if I was trading this, this is kind of where I'd be looking to buy. I'd be looking to get in, you know, around this 1.15 area, 1.16, because that gives me a pretty decent risk level. I could risk, say, like 3 cents, looking to get almost like 15 cents. So this is kind of where I'd be looking to buy. You can see that it's kind of making this little bit of bottoming action where the price is being held up with some solid volume at this 1.16 level. So you can kind of assume that this could be the temporary bottom as long as that area holds. So you can start using that as a risk and start looking for what I like to call a bounce play. So we'll see if this one plays out a little bit. It looks like it might. So, I mean, you can see it's already a 3.5% bounce. That's, you know, I mean, depending on your position size, that's actually not too bad. But here goes, you can see we're starting to get that move to the upside now after establishing this little bit of a bottom here, showing that the buyers are stepping in, they're preventing the price from going lower. And at that point, you can start to sort of adjust your risk. So you can see that this is where you're seeing is the bottoming action, where you're getting a bit of a bounce. And now you can start to assume that if it goes below this price, there's likely more downside because we've already seen this upwards move. If we just flicker over to the NASDAQ, you can see that there's been a pretty significant gap down here. Pretty big sell-off in the indexes, so pretty big gaps down, pretty big gap down. So you've got to be conservative with your longs, as I said. So, you know, instead of maybe trying to make 10% on a long, maybe you'd be trying to make 5% or something else. Obviously, it depends on your personal risk level, risk tolerance, but it's better to be safe than sorry when the markets are this red when you're in a long. Generally speaking, when the markets are red, you'll try to looking for short setups instead of long setups. But when I'm looking at these top percent gainers, I'm looking for long setups generally, unless it's a specific type of chart, which I'll go into when I start talking about more specific strategies. But this is what I call a morning dip buy, basically. So you're looking for these big percent winners to have this kind of morning sell-off where people are kind of panic selling. They're getting out of their positions, especially when it doesn't look like it's immediately spiking upwards. And then you see the buyers start to step in back towards these support areas. All right, so you can see here this is kind of playing out exactly how I would have wanted. Now, personally, on a day like today, I'd be looking to sell. You know, this is 5% gain. That's a pretty solid win. It's really just a single, but a single win, those things add up over time. If you're risking, you know, 2.5%, which is what we were looking at, 5% win's pretty good. So you could start looking in some profits here, and then looking for it to maybe move up towards this sort of resistance level that I was mentioning up here. It might test the day's highs. If it can test this day high and push through, you might see even more upside. But this daily high acts as a pretty solid resistance as well a lot of the time. So better to be conservative on these bounces. Take the predictable part of the move, as I talked about in my last video, and the predictable part of the move is going to be the first part of the bounce. However your risk reward is, you can choose to be a little bit more conservative or aim for a little bit bigger. It's totally up to you. Personally, I've just found with these bounce plays, it's best to lock in between 5-10% profits, at least half, and then see where they go from there. Because a lot of the time these will return to their highs. You can see these things, bounce and then break out huge. Some people like to go for the lower percent chance of winning for the higher percent gain. That's totally up to you if you want to record what you're doing and seeing if it's working for you. You might find that you are more profitable taking these longer wins. Personally, I get an itchy profit finger. I like to just get out of the trade, take the small win, and then move on to the next one, because every single day there's more of these. If I can lock in, 5-10% on these plays every day, that's paying for all of my living expenses and then some. So that's all I really need to be doing personally. You can see this is starting to dip back down, but let's have a bit of a look at this one. So this is the IPO play. You can see that this is just gone crazy, held its highs and has now pushed up 30% from the morning dip. So you had still the same thing, this morning dip down towards the support area, and it's just now flying. Let's have a look at these ones. This one's not really doing much. I wasn't really a fan of this setup. AGLE, similar kind of thing. You're seeing this morning dip and then bounce. So that's what I like to look for anyway on these plays. Maybe I'll post a screenshot of how this SMMT actually ends up at the end of the day, so you can kind of see that this lesson's getting a little bit long, a bit longer than I actually anticipated. So I'll probably end this here. But basically, the fundamentals of this lesson are to focus on these big percent and volume gainers, because that's where the traders are. That's where you want to be focusing. You want to be where the action is. Don't, go to some random stock that has, 50,000 shares traded. It might be up 50% with 50,000 shares traded. It's almost untradeable. You'll just sit in a position and it will, just do nothing. You'll have these little dots and normally a 5% spread where you probably can't even sell at the price that it's showing. You'll just get stuck in positions. You'll get stuck holding bags, especially if there's a big seller who decides to come in and the price just drops 10% in one minute and you just can't exit. You don't want to get stuck in those situations. You want to be able to have this liquidity. You want to have the ability to get in and out no matter what, or else you get stuck, having things break below your risk level and people get caught up making mistakes at that point. You start thinking, oh, well, I'll just, buy more and it'll go back up, or I want to make sure it gets to my risk level again first, or maybe it even bounces and you end up taking a tiny bit of profit instead of sticking to what your original plan was. The important thing is making sure that you can stick to your plan, and to be able to stick to your plan, you need this volume, this liquidity. So every morning, make sure that you're building a bit of a watch list of these top volume gainers, top percent gainers, and I suggest that's where you focus your attention to begin with as a trader. As the day goes on, check. It's worth looking into some scanners. That investing.com website also has simple scanner. There's Finviz, it's a good one, which will give you the daily percent gainers. So that's where you want to start focusing your attention as the day progresses. See where the trading volume is on some of these plays, not just in the pre-market, but throughout the day. And as it moves into the afternoon, that's probably where you'll want to start focusing your attention on the things that have had the highest volume traded during the trading day, not just in the pre-market. Anyway, I'll leave this to keep going. I'll probably post a screenshot to give an idea of where this particular chart ended up. As you saw, we were talking about the entry right here on this live area, and it's slowly trending upwards. Maybe it'll end up moving up towards this area like predicted. We'll see how it goes. And yeah, thanks for listening. It's been a pretty long lesson, so hopefully it's not too long-winded.